They cut and sell. They don't cut and take. Good morning and welcome to the daily morning briefing. It is the last day of the month, last day of the most depressing month of the year, 31st of January 2017. It is Tuesday. Thank you very much for joining us first thing this morning. It's an incredibly busy week this week. We know there's a lot of data, there's a lot of corporate data, there's a lot of economic data, and then there is the almighty Donald Trump in the White House at the moment, which is causing the biggest stress for the entire market at the moment, and it's really the uncertainty that's causing, which is really moving the markets, and that's going to be the real major focus that we can't really get away from within the next well, however long really. So it's a very important time. It's a very important situation to be in at the moment. So I think it's a case of really trying to play ourselves around a lot of the economic data and then protect ourselves around those key Donald Trump announcements, because that's the big one that we have to keep an eye on. That's the key information that we have to make sure we're watching. And of course the big thing that we have to be watching is Twitter. Watching his Twitter account, see exactly what's coming out, see exactly what he's saying. Usually his tweets at the moment are followed up by news conferences or big events. And let's just talk over what has happened in the last 24 hours. First of all, Donald Trump has sacked one of his top attorneys in his administration. It was actually a lawyer appointed by Barack Obama during the last administration. However, he has sacked her, Sally Yates, for basically not agreeing with him. So not agreeing on his travel bans and all of the big information from those travel bans which is coming out. So he has sacked her on that. Now, of course, it comes as Donald Trump gets ready to name his top picks for Attorney General and for the Supreme Court. So it all ties in at the same kind of time, but pretty much everything that is coming out of the White House at the moment is causing a massive stir within the markets. So it's a key one to keep an eye on and make sure we're looking at how these markets are moving on the back of that information at the moment. And the problem is, of course, is that it's just unknown. We don't know when it's going to come, what's going to come, and what's going to be the nature of it all. So just be aware that Donald Trump is in there. I mean, I'd love to be able to tell you what's coming and say that we would be okay market-wise around it. And of course, what it does is it generates volatility, and for us as traders, that's of course what we want. For the wider world and unity around the world, maybe it's not necessarily the best thing we've ever seen. However, it is for the markets. It does generate volatility. It generates market moves, and that's what we want in these markets to be able to trade, of course. And the big worrying point, of course, around this is that many people thought when Donald Trump actually became President Trump that there would be a stark difference in what he said and how he was, how he portrayed himself, how he put himself across. However, it just isn't the case. If anything, he's more sensationalist now. He's more he's more aggressive than what he was in the campaign. On the campaign trail. But again, none of this should necessarily be too much of a surprise, should it? Because what he's saying is everything that were in his election pledges, and what he's doing, his fans love, and of course, from that point of view, his approval rating is at record low, but that's because half the country didn't vote for him. The half the country that did vote for him are loving what he's doing at the moment. So it's hard to gauge without getting particularly political about it, so it's probably best that we don't. Let's look at the economic calendar and move on. And sorry, just one more thing on that. It's the fact that when you look at situations like this with an elected official, political story dominating markets, that is a very rare situation. We don't get that. The markets usually would ignore any political story. A travel ban would be completely ignored. okay, it's wide-reaching, and it's the shock factor that gets everyone going, and it's public interest that it garners, and when it garners public interest, that is when it starts to move the markets, and that's why now it becomes a snowball effect. That anything that he says, he hasn't even said anything around fiscal policy. There's been nothing about the economy, nothing about fiscal policy. We've got the Fed meeting tomorrow night, and we've got nothing about any sort of any discussions around any kind of fiscal policy, yet the markets are moving on the back of his every word. So just imagine what the case could be when we do finally get something about fiscal policy. That is going to be the worrying point, and we just don't know when that's going to come. Anyway, let's move on. Let's look at the time. We know that it's Chinese New Year at the moment, so a lot of the Asian markets are closed still today, or were closed overnight still. But starting slowly to reopen, slowly to get going, and of course overnight we did see the Bank of Japan. We saw the rate decision out of the Bank of Japan, and rates were, as we expected, kept on hold, negative 0.1%. But Asian shares really still shrugging that off. They're focused on being rattled by Donald Trump's policies and that soft US dollar. So I mean, we know the immigration curbs are hitting a global nerve. We know that's an issue. But the dollar has been under pressure. That's again continued. We're also seeing falls in equity markets, but it's overshadowing a lot of the other stories. So Bank of Japan came out overnight. No real massive headlines from the Bank of Japan, to be perfectly honest. Overnight, we did get they kept their policy steady. We expected that to be the case. We didn't expect that to change. And in terms of the overall policy, again, there was not much in a real change in terms of the stance. Let me just take you to dollar yen just to have a little look at how the market has been reacting since then. This is the daily chart. We've still got these bigger levels, these lower points at 112.50 acting as the downside levels, and then the upside levels still sitting at these highs at around 115.50. So yes, that's a wide range at the moment, so we have to keep an eye on that. The fact that that's quite wide, so we do have a situation where there is movement in the middle. But if we go to an hourly chart, we can see that there was a bit of a fall and over yesterday really, and into this was yesterday and late into yesterday's session. That continued that sell-off and that fall down that we'd been looking at previously. Now we're really no real reaction overnight from the Bank of Japan and what we saw there, but we did get an extension of the lows, the recent lows, which takes us down to 113.24, trading 113.75s or so at the moment, nearly 113.80. Shorter term, there is this upside level that we're approaching at the moment, that we could be looking at 113.85. There's a slightly higher as well. We could be looking at this high here, which is at 113.90, but all points to really that 113.85 to 114 is the big level still for dollar yen on the shorter term. Yep, so the Bank of Japan came out with its data, as we said, not too much in the way of a big movement on the back of that, so we can go back to getting on with our lives after that one. So the press conference is still has been going on for a while, and it is done now. So Kuroda's been speaking, and again, not too much in the way of massive headlines out of there. This was still overnight. German retail sales came out at 7 a.m. this morning. They were all weaker than expected for December. So negative 1.1 on the yearly basis. So overall, German retail sales down for the year, and then German retail sales for the month, December, down 1%, 0.9% expected, plus 0.6. So real negativity in terms of Germany there. Currently, or at the moment, I think he may have stopped now, but Mario Draghi is speaking. He's not necessarily talking anything about the economy, so it's not really a market moving event. I'm just trying to get up his headlines here, and there's not even any real headlines here that have come up. So just try and there's nothing there really for this morning that with his speech. So there wasn't really a market moving speech. Within the next 15 minutes, at till just before 9 o'clock, we're going to get German unemployment numbers. They will be out. Again, they are closely watched to a certain degree. Keep an eye on those in terms of the DAX as well, because the DAX could have some movements on the back of that. But still, key to look elsewhere around those. Then, as we go into the UK this morning, there's the M4 money supply. There's mortgage approval numbers coming out at 9:30 this morning. But then the big numbers this morning do come out from the Eurozone. You have CPI at 10 a.m. 1.6% is expected for the year-on-year figure for the January number. These are preliminary readings. And then the year-on-year figure for the core CPI is expected at 0.9. So again, remember that difference between the 1.6 headline CPI and the 0.9% core CPI is the fact that is strips out oil and energy prices. So you can look at core CPI as the rest of the products throughout the Eurozone. And then you have that GDP number, 0.4% expected on the quarterly basis, 1.7% expected on the yearly basis. Now, it's going to be interesting to see whatever we get on this situation on GDP, because we had previously we've had UK and we've had US GDP numbers. Now the US GDP number missed expectations, missed it by quite a lot. Is expected at 2.2, came in 1.6. UK GDP for 2016 beat expectations, actually came in 2.2 rather than 2.1 expected. So it'd be interesting to see what we get from that Eurozone GDP this morning, whether that's going to jump high. And again, it's going to give us that situation of just what that plan involves when we look towards the ECB asset purchasing plan. We heard a couple of weeks ago, Mario Draghi with the ECB talking about the extension to that. We know what the extension plan is. We know at the end of March it tapers back from 80 billion euros a month to 60 billion euros a month, but then it's extended past March to December, and we know that in December there is the option to extend that further. So again, we have to keep an eye out for that. And then there's the unemployment rate coming out of the Eurozone as well at 10. So a lot of Eurozone data coming out at 10 a.m. this morning, particularly busy. Once we get to 1:30, we've got employment cost numbers out of the US, but that's the only real focus. Then GDP out of Canada. That's going to be a big one. GDP out of Mexico, because of as is the stories around the wall. We're all looking a little bit closer at Mexico and what they're doing. It could be something that we end up playing into. And then 3 o'clock, consumer confidence from the US, and then that will be the focus for the rest of the day. But then that's just economic-wise. There is a huge amount of corporate data today. So let me just bring you up this corporate data. So it's going to take us a while to get through all of these economic and bits of corporate data. But let's look at this. Corporate data coming out today. The headline that you will see today will be Apple. So Apple comes out after the market close this evening, so keep an eye out for that one. That's always closely watched. But that's not going to be the major headline for this session. The Apple earnings will focus on next week's session, tomorrow's session, and the reaction to that. And again, we're expecting bumper numbers from Apple. We're expecting iPhone 7 sales to really boost their numbers higher. We were looking at a whisper number. Did I have a whisper number for you? I thought I'd written down a whisper number. Potentially not. Hold on a second. I'm sure I do have one. No, that was for Facebook. I'll find out a whisper number for you and we can have a look at that. But let's take a look. It's going to be the iPhone 7, which is the key one that we look at. We've got Electronic Arts coming out today. We've got Xerox, Under Armour, ExxonMobil, Nasdaq, all coming out today. Pfizer is another one coming out. MasterCard is coming out today. Visa is coming out today. Just keep going through these on today's session. Pfizer Ba, 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 ba. And then Apple at the end of the session. So there's a load, so many bits of data today. If we do something else, look at the FTSE. Let's look at the FTSE. Let's look at the corporate events for the FTSE today. And we'll see what's already come out and what's expected later on today. There's 7 Trent that's come out this morning. There's a few others coming out. But then as later on as we go in the week, on Thursday we've got AstraZeneca, Vodafone, Compass, Royal Dutch Shell, all on Thursday. So they're all coming out. Glencore. So Thursday's a massive day for the FTSE 100 with their numbers coming out. Then. But today, not too many today. We've already had 7 Trent, and that's been a big one, and SSE Energy, which has come out today as well. You have to look at those corporate earnings. Interesting facts about these earnings, in fact, was that we've currently had 225 of the 500 S&P stocks already come out with their numbers, and 73% of all earnings have beat expectation. So 73% have beaten expectations. That shows you why this has remained strong. It's why we've seen that slightly stronger presence in terms of those equity markets. And let's get to the charts. Let's look at these charts just to finish off with today and see what's going on. Let's look at the Dow. The Dow's been interesting, as we know. Excuse me. Because of that S&P. Because of that 20,000, because of that 20,000 level, we did break above that 20,000 level. It was incredibly strong, broke above that, but Donald Trump's ban on travel from these certain Muslim countries has caused a stir. That all of the shenanigans going on out of the White House is causing a big issue. If we look at this from a technical point of view on the daily chart, we can see that this has come back down on the trend line and testing bang on that trend line, which is just underneath that 20,000 level. So we're trading 19,940 at the moment. That's really where that downside is. It's going to have to narrow in again towards that 20,000. Be interesting to see whether we get back above that 20,000 again. And then the extra level then is at those highs which we set, which is at 20,144. That's the new upside level that we have to keep an eye on. So they're the moves. That's where it's going to be a very interesting time to see where we go on that. But that trend line is currently in place. If we go on the shorter term with that, again, the trend line is in here. We can see there's a little bit of space for us to get into. So we'll be looking at these lows. Looking at the lows for the trading session, 19,867, that was during yesterday's session, and those highs up at 19,975. They're the levels that we're going to have to look out for from an intraday point of view, but it's that overall trend line which is going to be causing the issue. Okay, let's look at euro dollar. Some saying you can't see my price on the right hand side. Can you see if I keep it like that? Does that work better for you? Hopefully you can see the prices on the right hand side. Sorry about that. Let's look at, this is euro dollar. Let's take a look at that euro dollar chart. Again, looking at these highs. This is the hourly chart. We're looking at that high 107.75, 107.80 or so on the upside. And then that really goes up to 108. So that's really the key session up there that we have to keep an eye out for. And then I'm just going to stick a fib on here from this high, just to see if that brings us in any levels. No, it absolutely doesn't. So we can get rid of it. So that's our high point. From there, let's go 4 hourly. We know we have this trend line in place still. That important trend line that's coming in there, so that's going to be key for us to keep an eye out for. So that's the move on the 4 hourly, and if we go to the daily, again we can see this. So we'll go from this low down here to this high, That'll probably be easier to see on the 4 hourly, to be honest. And then we can see that we come down, test that trend line on the downside, but then that's 38.2 level on the downside underneath that. You can see actually that it doesn't like it below this 23.6% retracement on the 4 hourly either. So if it drops, but every time it's dropped below that, even this aggressive fall that was a long way below it, still came all the way back. So just keep an eye on the fact that we do have that situation in there. Let's look at cable. Haven't really spoken about cable too much the last couple of days, but let's just have a little look at this from a cable point of view. Let's go right to the daily. We know that there's still this strength in here. Looking for some key levels on the downside to really start holding us up, to be perfectly honest. And I think so. That low's 24.20 on the downside. Again, this stick a level in at these lows, which is lows from yesterday, down at 126.64. So just keep a little eye on that. If that then starts to move higher, we can see a retest of this level at 125.40. But still, with still looking at that high point up here as well, which is a recent high to keep an eye out for. But the big level on this is 127. 127.80 is still the big level for cable. I'm just going to add that in. Yeah, 127.80 is still the big one on the upside that we have to keep an eye out for. So it's just around those highs, and it actually plays in with a fib as well. The fib's a bit longer term. The fib comes in from the highs back here to the lows down here. But we do have to be a little bit wary on these fibs, because it does take in on cable, because it does take into account this flash crash low, and it kind of upsets the fibs a little bit with those lows. So you can, if you wanted to, even forget those the flash crash lows and go from the high back in June 15 to the lows recently, and then put it in there, and it makes things look a little bit easier, a little bit better. So you can ignore those flash crash lows. It's up to you which way you go with it. Some people like to put it on. It's probably best to put both on and just keep an eye on it from that point of view. But apart from that, guys, I will leave it there for this morning. Thank you very much for your time, and I will speak to you tomorrow. Thanks very much.